Good afternoon, traders. It is Thursday, December 29th, 2016, and the U.S. stock market is closed. Well, we only got one more day of 2016, and then we're going to see what happens. Uh, it was fortunately a boring but profitable day, and I much rather, as long as we make a little money, I'm happy. Uh, what's happened here, you can, I mean, the Dow really summarizes it. The Dow has had 5 runs up here. You see, let's see, we're going back 1, 2, 3, 4, 5, 6 days, and it has 5 runs at that 20,000 mark, and it's failed each and every time. And yesterday it really backed off hard, and today we had a continuation of that, but slowing down a lot. The Dow ended up down 14. So as things are right now, we're down almost 200 points under that 20,000 uh, mark. That 20,000 thing is strictly psychological, folks. There's no reality to it at all, but it's very powerful psychologically, and there's a lot of traders who look at the Dow just like I do, and they're thinking, hey, that's the top of the market. 20,000 top of the market. So whatever stocks they're trading, they put buy stops that are the equivalent above 20,000. And so every time it gets up there, it backs off because there's a lot of selling coming in. They think that's a good place to go shorting stocks and make a ton of money. They're going to be in for a big surprise. What's going to happen here is, and I don't want to be the predictor of when it's going to happen, but this thing will turn around, and I think we're getting pretty close to it right now. This thing down here almost looks like a bull spike, and it's going to scream. And I'm going to tell you, when it goes through 20,000, it's not going to hesitate at all. It's just going to go through that and not even pause and ask permission. It's going to scream through it because there's a lot of buy stops right up above there, because a lot of traders are calculating, hey, that's the top, and if it goes through there, they want to get out of their short position. So there's going to be a big short squeeze when this Dow finally goes through 20,000. As I said, I don't want to predict when, but I think it's going to be pretty soon. Anyway, I'm much happy. This is very healthy for us to have this thing down here, because we don't have all the selling going on with it down here at the 19,800 level that we had when it's up there close to 20,000. We're having a lot of trouble up here, as if you recall. Anyway, so we did pretty good today. We closed out about $7,000 positive in closed out trades, and we only got into one position today, but it's positive, and we're carrying positive 700 on that single position. So, everything was fine today. As I say, there was no drama, and we made some money. I will show you some of the stocks. I'm showing you this first one. It is a new stock, and we did make a little money on it. This is DRIP, and DRIP is oil and gas exploration bear. In other words, it's going to go up when oil and gas exploration stocks go down. It is leveraged. So, well, we didn't make a ton of money, but we bought this yesterday, second hour. We got out of here this morning could have hung on to it if we had known, but we didn't. But where we got out here, we got out of that with a little more than $1,000. Then the one single stock that we got into today was HL, that's Hecla Mining, and that looks real good to me. I mean, we don't have a lot of money, and we bought this right out of the gate, but it closes right on its high, and we have about $700 there in open trade equity in Hecla Mining. So that looks real good. And then this, of course, is what I have showed you the last 2 days. This is Kate Spade, and yesterday news came out that they were going to put the company up for sale, and of course it really exploded here, and we got out here with $9,000, over $9,000 in profits. So that was a real good trade. I had somebody on StockTwits commented, you know, they couldn't understand why I didn't get out here yesterday. And of course, the simple answer is I trade a system. But I mean, even if we're looking at this from a psychological standpoint, you know, hindsight is always 20/20, and you can look at this. Well, sure, I should have gotten out here, but you don't know that it's here, and there's nothing. And I've seen this, folks. I've seen this so many times. This thing could have taken off and gone to 18, 20,000. Maybe that's not so likely, but it can happen. It does happen. And that's why we wait. That's why we are willing to wait overnight, because you never know what's going to happen, and frequently this thing will go higher. It didn't go higher. It pulled back a little, but we still made $9,000, over $9,000. I'm very happy with that. Anyway, Trader Bob is happy. I'm having a better feeling about these markets right now, mainly because of this pullback. We'll just have to wait and see. Anyway, this is Trader Bob signing off. I'll see you tomorrow on Friday.